So last week you had a note out that said your potential upside risk, and this wasn't your base case, would be $100. Then we have this big rally. Does that $100 now look a little bit more interesting or more prescient than it would have last week?
Alex, well, thank you for having me again. Well, first of all, just to put everything in perspective, our baseline view assumed, since unchanged since last June, assumed that we'll be hitting $90 by May. So it does seem that it's being brought forward by about a month and will be there by April. But again, that as you absolutely correctly pointed out, the risk is that actually on the way to our price forecast, we will be hitting $100 as well.
Okay, so in terms of what's going to drive oil prices to these kinds of levels, Ed Morse was saying that financial markets have really been behind the recent move higher, an increase in Middle East tensions, of course, boosting speculative flows. Is that what you see, or fundamentals driving this?
No, so the move is being moved by the behind the move is definitely the fundamentals. So we envisioned very strong demand growth. Everything what we're observing at the moment is indeed this is happening. The growth is not just resilient, the global economic growth, but it's also broadening out into the different regions and the different sectors. So all of that is there, and we're getting to $90 just because of the demand. What has changed behind our thinking, and that's where the $100 is coming from, is the strategy from Russia. So that has been very surprising to us. Russia made an announcement in early March that they will be cutting additionally their production, and they see the production reaching 9 million barrels per day by June at face value, and assuming no policy response, no response from the supply or demand. Actually, these actions from Russia can get the prices to $90 already by April, mid-90s by May, and will be hitting $100 somewhere in August, September. Importantly for the U.S. consumer, we'll see the gasoline prices already getting to about $4 per gallon somewhere by May, June, which would be the highest since June 2022.
Yeah, and that does not bode well for President Biden into an election. So what can the U.S. actually do about it? They've been refilling the Strategic Petroleum Reserve. What's the probability that they could release it and actually make a material difference on prices?
Well, so what the lessons from 2022, the energy crisis of 2022, what they taught us that there are multiple levers that actually can bring the prices down. So number one, which is the most obvious rebalancing mechanism, as you absolutely, Alex, pointed correctly out, is that it's the SPR release. So though diminished, we still have significant amount of inventories in the SPR that can satisfy domestic needs, but also cushion against the price shocks. So we estimate that the U.S. administration has the policy to release about 60 million barrels of crude oil, boosting supply by about 500,000 barrels per day if it's spread over the 4 months. The second lever, and that's exactly was the examples of what happened in March, June 2022, but also in September, October of 2023, is the demand destruction. So in general, considering where the borrowing costs are at the moment, where the prices are at the moment, we do believe that for the U.S. consumer would be significant. It would be very difficult to take prices above $95. For the emerging markets, actually, this level is even lower at about $90. So that's one of the reasons why we kept our price forecast unchanged. So we'll be hitting $90 by May. But for the second half of the year, we'll be averaging about $85.
Gotcha. Now, in terms of the U.S. Releasing barrels from the SPR, the reserves, what's the timeline? How does that play out? Because if they move too early on that, they might have backed themselves into a corner where they have to continue doing it until early November.
Yeah, you're absolutely correct, Scarlett. So the timing is everything. So the question is what will trigger that, whether it would be the $90 oil or whether it would be the $4 gasoline. It does appear, at least looking at our numbers, it will be getting to those levels by May, June. So after that, they can release release about 1 million barrels per day for 2 months. So that was not the case in 2022. Most likely, if they will go ahead with this option, it would be about 0.5 million barrels per day spread out over 4 months, which will bring them somewhere by September, October, and bring prices lower ahead of the U.S. elections.